Well, the show's getting pretty exciting, isn't it? President Trump says China has totally violated its trade agreement with the United States. Supreme Court has cleared the way for the Trump administration to end temporary protected status and work authorization for more than 500,000 migrants from Cuba, Haiti, Nicaragua, and Venezuela. Don Lemon suggests banning white people from the United States for national security reasons. World Economic Forum founder Klaus Schwab has filed a criminal complaint against anonymous whistleblowers who accused him of misconduct. Go figure. President Trump has not ruled out granting a presidential pardon to Diddy if he believes that Diddy is being mistreated. The White House announces steel tariffs will double from 25% to 50% starting next week. A man has set himself on fire in a subway station in Brazil. It's called immolation. U.S. Defense Secretary Heggs warns that China is preparing to use force to shift the regional balance of power. A Secret Service whistleblower alleged that Joe Biden would get lost inside his closet at the White House. Maybe he did. Good morning and welcome to another exciting episode of TEDSpeaks. Today we're diving into a topic that's been gaining a lot of attention in the financial circles lately, financial contagion. But even more interesting, we'll be exploring how silver plays a role in this dynamic. So grab your coffee, sit back, and let's dive into this thought-provoking subject. You ready? First off, let's define what financial contagion really is. In simple terms, financial contagion refers to the spread of a financial crisis from one institution, market, or country to another, usually due to interconnections within the global financial system. Imagine a tiny crack in a dam, and as the pressure builds, that crack grows and the water starts to seep through, eventually causing the entire structure to crumble. In the context of finance, it's a ripple effect. The shock in one part of the system can have far-reaching consequences, impacting not just the originator of the crisis, but also seemingly unrelated markets and economies. So how does contagion happen? Well, financial markets today are more interconnected than ever before. We live in a world of globalization where money, goods, services flow across borders at the speed of light. In such a world, if one country or institution faces a serious financial crisis, the repercussions can spread like wildfire. A sudden collapse in a major financial institution, such as a bank, could trigger a chain reaction, causing investors to panic, sell assets, and trigger further losses. Think about the 2008 global financial crisis and how the failure of Lehman Brothers in the United States sent shockwaves through the global economy, affecting everything from mortgage markets to international trade. So what makes financial contagion particularly dangerous? It's the uncertainty and unpredictability that it brings. When investors don't know what's happening, they panic. And when they panic, they make rash decisions. Those decisions could influence fleeing. Those decisions could include fleeing from riskier assets like stocks and bonds, looking for a safe haven for their wealth. And this is where silver comes into play. Silver, a precious metal, has historically been viewed as a store of value, a safe haven in times of economic instability. When the financial system begins to shake, when markets are volatile, and when uncertainty grips the global economy, investors often turn to silver as a way to protect their wealth. Think of silver as a hedge, a way to diversify risk away from the volatility of stocks, bonds, and even fiat currency. Now we all know the famous quote, "Gold is the money of kings, silver is the money of gentlemen." In times of crisis, silver has a unique role. When gold is often seen as the go-to safe haven, silver has some distinct advantages. For one, it's more affordable, which means it can be more accessible to a wider range of investors. Heck, you can buy a dime now for under $3, especially during times of economic turmoil. This makes silver an attractive option for smaller investors looking to protect their wealth. You can get started with under $3, folks. Just get a dime. But it's not just about affordability. Silver has industrial uses, which adds another layer of resilience against the financial contagion. Unlike gold, which is primarily used for jewelry, investment, and a store of value, silver has a robust industrial demand, especially in electronics, solar panels, and medical equipment. This means that even if investors are fleeing the stock market and moving into physical silver, the inherent industrial value of silver could help prop up its price. When we're dealing with financial contagion, markets turn into a frenzy. Stocks crash, currencies devalue, and bonds lose their appeal. But silver, due to its dual nature as both a precious metal and industrial asset, tends to hold its value. Even during periods of intense financial stress, the demand for silver tends to stay strong, if not rise, as investors seek out alternatives to more traditional forms of investment. Additionally, silver has an added bonus during periods of financial contagion: its historical link to inflation and currency debasement. Central banks, when faced with financial instability, often resort to printing more money to try to stabilize the system. It's happening now. But as we know, printing more money can lead to inflation. It does, which erodes the value of fiat currencies. Silver, on the other hand, has maintained purchasing power over centuries, making it an attractive asset for those looking to protect themselves from inflationary pressures. So what does all this mean for you as an investor? In times of financial contagion, silver could act as a protective shield against the chaos in the markets. While stocks may plummet and bonds may offer minimal returns, silver has the potential to hold its value or even rise in price as investors flock to it as a safe haven. And in times when currency values are under pressure from inflation or global instability, silver's ability to act as a store of value makes it an essential asset for anyone looking to preserve their wealth. So in conclusion, folks, financial contagion can spread rapidly across markets, causing widespread instability and panic. But in times of financial uncertainty, silver offers a safe haven, a shield from the storm. Whether it's due to industrial demand, its role as a hedge against inflation, or its long history of acting as a store of value, silver provides a powerful option for investors who want to protect their wealth during times of economic distress. So as we move forward, keep in mind that silver could very well play a big part and pivotal role in your portfolio during times of financial contagion. Your rock in the middle of a storm. It's not just about hedging risk, it's about taking control of your financial future when the storm clouds of economic chaos roll in. Well, look at this. Canada apparently is part of the United States. When referring to part of the United States, includes any state, district, commonwealth, territory, insular possession of the United States in any areas subject to the legislative authority of the United States of America.
I would like to acknowledge that we are gathered on the unceded territory of the Algonquin and Anishinaabe people. This land acknowledgement is a recognition of shared history as a nation, while continuing to deepen my own understanding. It is my great hope that in each of your communities and collectively as a country, a path is found toward truth and reconciliation in both word and deed.
But it's actually to control the Northwest Passage. Whoever controls Canada will control all of commerce for North America and South America. That's a true story.
Trump administration creates training course to teach government workers about the Constitution. SES senior executive service employees serve the key positions just below the top presidential appointees and are the major link between these appointees and the rest of the federal workplace. Higher yields bring U.S. fiscal precipice even closer. We have $7 trillion need to refinance this year. Where's that going to come from? Purchasing power of the U.S. dollar went from 100% now to less than 3% right now. I did the math on it by taking the U.S. M2 money supply and the currency and credit derivatives, and you're under 3% right now. So $2.3 trillion. Never forget what happened on September 11, 2001. Donald Rumsfeld held a press conference to state that the Pentagon was missing more than $2.3 trillion. Boy, they got all away with that all in the middle of the night, didn't they? And they say print more money, save the system, or hit the reset button and save the people. I say we save the people. Punished for living debt-free, Canadian man's credit score wiped by Equifax after he avoids new debt. Check this out. David Traeger of Victoria man saw his Equifax credit score unexpectedly drop to zero, leaving him unable to access loans or credit. He had stopped using credit to avoid debt, but never expected to be penalized. I was just stunned, Traeger said. What do you mean I don't have credit? The Equifax only explained the issue after CBC's Go Public got involved, citing a rarely publicized policy. Credit scores may be reset to zero after long inactivity. Traeger's score was once around 700 before it vanished, and now he must rebuild it from scratch. A catch-22 as lenders reject him without an existing score. About the tie that we have on here today. Glad you guys have been following us for quite a while. Well, we're going to be unpacking what's going on. Yes, and putting it all out on the line. A whole lot of things happened on Friday after the market closed. Futures took a big dump, and we have the graphs to show you what's happening. So get a nice, good look at this tie, because we're having a spaghetti dinner tonight. If you guys can make it out, I don't care where you come in from, we'll have plenty of spaghetti for you. It's a time for us to get together. We have plenty of tables. If you guys want to come in from wherever you're coming in from, we already have a group coming right now, because I think we have something to celebrate. Yes, I'm not wrong. I'm early. But this is a whole lot going out on the line right now. Let's see what happens on Monday. I think there's going to be a big, huge liquidity squeeze. Stocks are going to crash beyond belief. because there is no real money out there, is there? And so let's find out whether or not I'm right. But, you know, I believe I am. And let's find out.